The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I hope everybody's doing well today. I would like to remind you folks, 22 days from today, we have spring. There will be snow here in Tucson on Wednesday. We live here in the foothills of the Catalina Mountains, and there'll be snow in the mountains right behind us. We've had snow on the ground here a couple times over the past 25 years. We had a blizzard here, I believe, about 4 years ago that left about 6 inches of snow, but it was gone by 10 o'clock in the morning. But we were having unseasonably cold weather, so we will be getting some snow. During the day, the highs will be around 65, but that's neither here nor there. We're going to start off with the DAX as we usually do. And as you can see, these markets have had some pretty substantial breaks here. These are daily charts that we're going to be looking at in the DAX and the FTSE. And I just wanted to show you that the quality of the rally that we're having in Europe is far different than the quality of the rally that we're having in the United States. So I think that's something that we would ought to remember. You can see the FTSE after we made that big ABCD pattern to the upside, that it was a pretty big break. We broke about a little more than 10% to the downside, around 12%, and now we're rallying back. So far, we've made a 38% retracement in the FTSE, and we do have this full moon coming in here. And we also have a guest coming in on Wednesday. We have our good friend from Astro Trend, Norm Winsky, will be on. But those of you that listen to the Tom O'Brien show this afternoon between 3 and 4, I'll be doing that show for Tom because he's at the Money Show in New York. And so at 3:30, we're going to have Samuel Archibald Arrington Hicks Crawford. Sam Crawford from Crawford Perspectives will be my guest at 3:30 this afternoon on Tom's show. So we'll be talking about that and some Dow stocks and some of the other things that you folks have an interest in, but we want to cover some of these things. There's two major things that are happening in the world, folks. I don't know the ramifications of it, but my good friend Byron Tucker alerts me to the fact that these could be, really big things. The first, we have this Italian election on Sunday that could have some big ramifications because the Italian banks are under earthquake protection. They're shaky at best, so we'll be watching that, of course. And the other one is the fact that China has now starting to move towards a situation where there's no longer a two-term president like we have here. So President Xi could also be there forever. He might be the lifetime boy, who knows, he's going to be the big daddy rabbit there for quite some time. But that changes all the politics, folks. So we need to, pay attention to that. That gives him extreme broad powers. So whether that means much or not, I don't know. And that's one of the reasons, why I'm a technician and I don't follow it. But those are economic events that can change the continuity of thought. And that's when you have these huge moves, that occur. Now, the first question, I have two questions this morning that really need to be answered. The first one is regarding how do I follow all the markets that I follow, particularly in the foreign exchange. Folks, when I follow the foreign exchange markets, I basically look at the 6 major cross rates versus the U.S. dollar. That's the euro, pound, yen, Canadian dollar, Australian dollar, Japanese yen, and occasionally looking at the Swiss franc. I don't do the Mexican peso, the Turkish currency, the Polish currency. None of these others do I look at. Occasionally I might look at it because someone's asking me a question, or it might be at a spot where it's very, very low risk. But some of these spreads that you have on these exotics or thinly traded currencies, like if you're trading the Turkish with the Polish currency, you're going to, that spread's probably going to be 10, 12 pips. I don't even know, but I would guess it would be that much. So you have to give a lot up. Where if you're following the 6 major cross rates and the cross rates between those, like the yen and the pound, the pound and the Canadian on the Australian, you can get lots of different opportunities. You only really have to follow 6 major cross rates of the 27 that are out there. So that's primarily what I'm doing. And the other thing is I don't watch the monitor all morning long. Most of my day, I start real early in the morning around 5 a.m. My time here, which is 7 o'clock in New York. I'm usually up before that, but anyway, and I'm usually done by 11 o'clock at the very latest. Sometime if it's real crazy, I might stay in a little longer, but most of that time, that's what we're watching. So we want to watch that. The second question that someone asked me was about the trades that these folks talk about in the den. And the Tiger Den is where traders get together. Usually there's somewhere around 40 to 70 traders in there all during the day. Some of them are regulars, but they give some really great information, folks. They really do. If you'll remember, going back just a few weeks ago, and I'm talking just very few weeks ago, it was back in actually it was late December, but actually the trade was in January. So we're looking at basically 8 weeks ago. Mr. Z in our trading room here from Philly posted a trade that he was doing, and he gave the exact entry point and he gave the exact stop point, and the entry point was 1845. The low was 1842, I believe. And if you look at the chart today, you can see that we're now trading 4 handles higher because it's higher this morning. We are actually above those highs in November this morning in the cocoa. So that's been a huge move with extremely small risk. And you'll notice the interesting part about this cocoa chart, if you study it carefully, and I don't trade cocoa, I haven't for 40 years, but if you'll notice the retracements that we had there, you can see the retracement levels. Each one of those retracements was nearly perfectly equal. That just basically shows you the harmony, that cocoa has like other markets. So it's a very big market. And you'll notice how that we're coming up to a double top now where a big ABCD pattern is there. We took out that high at 22.40, I believe, today, and that's where everybody's probably going to get long, and that's where the ABCD completes, and that's probably where you're going to get a pretty good correction. That's my guess. But this is just a pattern. I don't know anything about cocoa other than most of it comes from Africa. So anyway, that's what it looks like here. So these are the types of patterns that they look at here in the den, and there's been several. We have a break coming up here pretty soon, but one of the patterns that we've been watching very closely through the eyes of Mr. Z has been the natural gas, and I wanted to bring that to your attention because this past week or so, we were watching for a potential major bottom here in this natural gas. I wanted to show you, to start out with, the beautiful 61% retracement on the long-term weekly chart going back to 2016 that came in at 253. And anyway, we'll take a break here. 877-927-6648. We'll be back and talk a little bit more about natural gas and also General Electric and some Treasury bonds.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I believe we have Mr. Z, John from Philadelphia on the line. John, are you there?
Hey, Larry. Good morning, Larry. Thank you for taking the call.
My pleasure, my friend. What can I do for you?
Say, by the way, we will look forward in anticipation of your 3:30 conversation on Tom's show with Arch. That's always fascinating stuff.
Yeah, he's a lot of fun too. He's a nice guy.
Larry, thank you for posting the chart on the natural gas. I called in about bonds, but let me just add a thought on the natural gas. The pattern and its implications you showed, speak for themselves. I will share this with you. This winter, 2017-18, thus far, now marks the third consecutive United States winter that's warmer than average. And I don't know if that will continue. Two factors. Sometime in the future, we're going to get a winter that's colder than average. And one observation about today, despite the fact that the winter is actually warmer than average. Now, yes, there was a major cold spell in New York, Christmas to New Year's into January 15th, and now it's cold out in the West. Be that as it may, it is nonetheless warmer than average season to date. That season starts November 1st. And in spite of a warmer than average winter, the use of natural gas, as seen in the drawdown of stockpiles of natural gas in storage, the data that we get every Thursday morning from the government at 10:30, shows that the drawdown in wintertime inventories is greater than average. So it's warmer than average, but natural gas is disappearing more quickly. What that says to me, coming sometime either in the next 9 months, 12 months, might be 2 years away, we'll get a colder than average winter, and prices will not be in this $2.50, $3 range. They'll be dramatically higher. So I just share that with you.
That's a great point, John, because when you start to see changes in things like that, in other words, if you have excess supplies and the market is not going down, that's telling you the demand is there. You might not know why, but at least you can see the demand is coming in at this level. So that's very important. Now, you mentioned that you might have a question about the Treasury bonds. I posted the long-term 30-year picture of Treasury bonds because I wanted to talk a little bit about that because, Mr. Buffett was on the tube today on CNBC talking about how this has been such a terrible tax on people that have owned bonds because the interest rates have been so low. What he failed to talk about is that if you owned bonds, you get the capital appreciation because when they go up, you have more money, you have less interest coming in on the bonds, but you have the capitalization of the bond. So, there's a sort of two-edged sword there. You got to look at both sides of it. But to me, we have made a major top back in 2016 in June of that year when we hit that 170 level, which was an aberration because they changed the contract specifications. But to me, we're going to be looking at rates are going to get back into that normal range when we get bonds down to about that 99 level, which means that long rates would be around 5.5%. That's my 2 cents. You had a question? Go ahead.
Thank you very much. Last Friday, you showed a bond futures contract 4-hour charts.
Yes.
And in that chart, you showed one of your classic and favorite patterns. It was either butterfly to a bottom or 3-drive to the bottom, one of the two.
It's a 3-drive.
And lo and behold, yes, the bond futures bottomed after that FOMC minutes, I guess it was last Wednesday, bottomed down at 142.14. Bounced a bit, came down a higher low, 142.24, and now we've rallied 2 points. Now, full disclosure, I'm flats. I didn't take the buy. I can see why traders would have tried to buy. So my very specific question is this. Assuming you had bought the bonds down at 143, 142.24 Friday, say, 1, 2, 3 a.m., you have a very good unrealized gain at this point. My question, Larry, where is the point, looking at your chart work, where you book gains on a long, assuming you bought it down there at that 143 level, please?
Well, John, like you, I was watching other things and I sort of missed the bottom. I saw it coming, but during the time that it happened, I was doing something else that turned out to be okay. We've been very bullish these grains for quite some time, and that's worked okay. But getting back to the bonds, the main thing is what I do, John, is if I'm going to risk a half a point, which is $500 in bonds, if I make half a point, now my risk is zero. Because now if I don't take part of my profit there, and I'm talking about multiple contracts. If you trade two, you should take one at your break-even point. Then you put your stop at break-even on the next point. So you're guaranteed a $500 profit on the trade, even if it goes down and stops you out. So you're trading risk-free. Because I don't know how high bonds are going to go, but nobody else does either. They've gone 2 full handles, so they've gone not only $500, but they've gone $2,000, and you'd still have your second one on, so you made $500 on your first one, and $2,000 on your second one, and now all that money is yours. I mean, when you look at your equity run, it doesn't say potential profits there. That's your money. You can see the dollar sign, and that's the key here to look at. So you want to use a trailing stop at this level, but and sometimes I don't swing for those. I don't swing for the fences very much anymore, John. I enjoy trading, and I like the fact that I can quantify my risk really small. Looking at patterns that are 4-hour or hourly or daily. The smaller ones is what I'm looking for. But look at a long-term pattern. Not very often do I do that. And if we look at this Treasury bond on a daily basis, and this would really be a surprise to a whole lot of people, and that is we could get a rally all the way up to a 382 retracement of the high that we made at the end of last year, up around that 148 level, because that's only 4 handles. And John, we've made 2 of those handles in just a matter of a few hours. So we have the potential to see a 148 print in Treasury bonds, which I think would be the sale of the century, but that's what I'm possibly looking at.
Okay, very good. I appreciate that input. Thank you on that. In closing my call in to you, could you kindly share your guess to this question? The euro. The euro made a high back on February 15th, I believe it was, up at 125.5. Is there anything that you see in the long-term pattern, Larry, that suggests to you it is possible that 125.5 is a major top, and that the euro versus the dollar is now in the early stages of decline that goes down to 117 and conceivably much, much lower than that?
Absolutely, John. I'm going to post up here a 4-hour chart so the folks can see it, whether we can finish it during the time before the commercial, but we'll get back into it. But if you'll notice here on this euro chart, John, stay with me for the break. Could you please be with us after the break? Thank you very much. We've got Mr. Z on the phone. We'll be right back talking about the euro.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Mr. Z from Philly about the euro, and I've posted that 4-hour chart going back in the last 6 weeks. You can see the beautiful patterns. The harmony between the low and the high has been nearly perfect. But what the question is that has been asked is, what is the real outlook, for the euro on a longer-term basis? So I think what we'll first do is we'll look at it on a weekly basis, John, and I'll post the chart up here because this is the one that I use in my newsletter frequently for better projections. But you'll notice that the high we made there right below the 126 level was a 61% retracement of the high from 2015, and it was also a 1.618 expansion of the high from 2015. So 2014 on the 61%, 2015 on the 1.618%. Now, what we'll do now is expand it just a little bit farther to get a little larger look, because this is the one that gave us a relatively big clue that the euro was making a really good bottom down there at that 104 level, because it had all kinds of cycles and things happening. And if we put this up here to take a look at it, you'll see the long-term monthly. Now, John, if you'll look at the period between 2012 and 2014, the euro went from 119 up to 139. It moved 20 handles. And what have we done so far? We've gone from 103, we've gone up to 120, 125, 21 handles. You notice how similar those moves are? And it's coming in exactly at a 61% retracement for the high in 2015. 14, I think we made a major high in the euro, frankly.
Thank you so much for sharing that. I will tell you, I always get confused in examining what the fundamentals are, debt load, central bank policy, and then market sentiment. But and I'm also a very poor forex trader, since I like to kind of get a handle on what's likely to unfold the next 12 months. So I don't trade forex that often, but right here, right now on that euro, that potential of 125 being the end of a 2.5-year bounce leaves me very interested in speculating on the short side, and of course minimizing my losses in the event that I'm wrong. So thanks for sharing all that. Appreciate that, sir.
Well, one of the things that we watch, John, is that, last night's trading, we went up and we took out the highs of the previous day by a couple of ticks and then rolled right back over on that 4-hour chart. So that's another sign that says there's just not a lot of power coming into it right now. So we'll see. But there's a really good, we'll be watching that very, very closely.
Thanks so much. I'm going to sign off. Thanks for the show. Look forward to Arch this afternoon. One last thing, please. Sometime during the coming week, if you could spend some time talking about corn. Corn has been very quiet, very range-bound for 18 months. I'm thinking the chance exists for that to change with a bull market unfolding, so I'd appreciate that sometime later.
Would be happy to, and I think it's important because you've been alerting us about what's happening in South America, and the weather has turned. They were supposed to get rain, and all of a sudden, the last 2 weeks that the rain was supposed to come, there was virtually none, and so we're seeing strength in wheat, corn, and especially soybeans. This morning, with the position we were looking at in soybean oil about $800-900 ago, has really started to work. We want to thank you for alerting us to that too. So keep up the good work, my friend, and go Eagles.
Yes, sir. Enjoy that snowfall coming this week, Larry.
We certainly will. Thanks a lot, John. We appreciate your help here at TFNN. You do a great job for everyone.
I know.
Okay, folks, I wanted to talk just a little bit about General Electric. People have asked me a question about it, And I wanted to give you my 2 cents worth. What I'm going to do here is, this is going back in the old mental framework of the history book, but I'm going to post here a chart here of General Electric going back to 1999 and 2000. You'll remember in 2001, that's when Jack Welch left. He was there for 20 years, from 1981, I believe, and I think he left in 2000 or 2001. But the real change happened in 2000. You'll notice the pattern was showing a 3-drive. This is a monthly chart, boys and girls, so this is not short term. So there's a monthly high up there at that $60 a share level. The only reason that I remember all this is because my aunt, who was still living at the time, owned some General Electric, and she owned some 3M, and she owned a couple other of the stocks that were, doing extremely well. And this one she was looking at, and something big happened at General Electric that not very many people knew about it. And the only reason I knew about it is because GE Capital was the biggest producer of profits for General Electric, and there was a man there that was in charge of GE Capital, and he was the brains behind it. And that was, GE Capital was interest rates. That's what it was all based on. And he had some great ideas, but the problem was he couldn't get along well with Jack Welch, and he left. He went out, and I believe he started his own hedge fund. His first name was Don. I can't remember, I believe, the rest of it. The only reason I remember this is because my good friend Eddie Horowitz was telling me the story about this many years ago, and he said, I would really watch General Electric, he said, because this might be a major turn in General Electric. Well, my aunt got out of the stock at $50 a share. It went all the way down to $6 a share during the debacle of 2009, on March of 2009. Then it rallied all the way up to 32. You'll notice that was a 78% retracement of the high from 2007, 50% retracement from the high in 2000. So we're trading below the 61% level. So the next level is 12. If we go below 12, the 1176, I think General Electric is probably going to be selling off assets, would be my guess. But this was a decision that was made by Jack Welch before he left. And, that's, you don't see that in the news anywhere, but I remember that very, very vividly. I could be wrong, but I don't think that I am. It had something to do with that gentleman leaving General Electric, and he was running their biggest operation for profits, which was lending money. So let's, kind of keep in mind that that's what that's what's going on. Anyway, we got the market opening this morning. Let's see how we're doing this morning. We're probably getting up here to these levels. Keep an eye on the S&P up here at this 2765, because that's a 78% level. It's a little butterfly pattern hanging up there. It might not work, but it's like all the other patterns. They might not work either, but we'll just keep a very close eye on it. Remember, I'll be doing Tom O'Brien's show at 3:30 today. My guest will be Arch Crawford of Crawford Perspectives. We're going to have some new guests this week. We're hoping to have Tim Boast, a very famous astrologer from Florida, not too far from Mr. Winsky. Tim Boast is a good friend and a very good financial astrologer. And then hopefully we'll have one more mystery guest, and that will be Stan Harley later in the week. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I've posted a chart of our friend Shane Smolian of Wolf Trader, a very bright young man down in Florida. Has done a great deal of work in astrofinance, and I wanted to share this with you. This is a planetary index, and the planetary index is the speed of the planets. This work was originally done by a man named George Bayer, B-A-Y-E-R. He lived in Monterey, California during the winter. During the summer months, he had a private rail car that he would take to Chicago, where he was a member of the Chicago Board of Trade. This is during the 1920s and 30s. The reason why I remember and got involved with this part of it was because when he was living in Monterey, which was his home, he had a daughter there, and my good friend Jack Valeni, who I still talk to all the time, and we done a lot of trading together through the years. I was talking to Jack about some work I was doing with a guy named George Bayer that lived in Monterey, and he said, "Hey," Jack he serviced his pharmacy, serviced 3 nursing homes. And he says, "Hey," he said, "I have a bear in a nursing home, and she's in her late 80s, almost 90. That might be related." And so he made an inquiry, and sure enough, it was George Bayer's daughter. And he arranged for me to go up there. Jim Twentyman and I went together up to Monterey, and it was actually in Carmel. And we sat down with Miss Bayer, and she told us a story about her father. She had some wonderful pictures there that, oh my God, they were priceless. She promised me that I would have that box when she passed away, but never got it. And anyway, some wonderful pictures of the old stockyard inn, and beautiful pictures of the Pullman car that was converted into a basically like an RV on rails. And that's basically what he did. He left a really nice estate for his daughter, so she was able to live in comfort. her whole life, and she told me that her father had made a great deal of money. She didn't know how much, she says, but they always had the very best of everything. But he worked on this thing called the Planetary Index, and Shane has been doing this. What I want to bring this to your attention is, if you look at the date up there at the top, where we are in the far right, you'll notice those three peaks there. The third peak is 226. Whoops, that's today. So kind of watch the market, because we might get ready to see a turn day coming down in the market possibly. But, like everything else, it's all about how much money you risk. It's how much money it's not how much money you make, it's how much money you risk. So keep your stops, relatively close. 6-7 points in the S&P would be about the most you would have to risk up in this area. But there's a possibility that we could be looking like something like this happening. But Bear was for real. He really did a lot of research. He had a little booklet called The Egg of Columbus that was very, very rare back in the 80s. It was sold for like $25,000, and our good friend Norm Winsky happened to have a copy of it. And that was really, it talks about the markets related to the signs of the zodiac, which far over my pay grade, but it was all based on mathematics and harmony. But none of the mathematics was in that booklet, so it was a really booklet about overall theory and not too much about the application. So it certainly was not worth $25,000. It might have been to somebody, but certainly not to me. And anyway, that's the story of George Bear, but it does have some good things happening, with it. One other thing I wanted to share with you regarding the natural gas, because this is one of the things that we were talking about. We don't look at weekly charts very often, but the natural gas was really giving a really good indication here of where we were. We had a really strong area around that 256, 257 level. The low was 253, I believe. We're trading at 267 right now. But that double bottom that we had there, look how many folks, we've been there for 2 weeks, not being able to break below that. That's a very good sign that there's probably something very, very important happening. And of course, we've had that big move. How much it's going to go up from this level remains to be seen, but we need to watch it very, very closely, I would think. So that's another one that we want to watch with a great deal of interest. I've had a question about the longer-term chart that we had up about the euro, which was the monthly chart. I'll bring this up, and the question was, how do I figure out the cycles that were there? Folks, this monthly chart, all I did was there's a cycle. This cycle program is just about everywhere. It's basically the James Hurst theory of cycles, that the nominal cycles, they repeat over and over again. The problem is they usually only repeat twice, and then they shift because the market is always expanding or contracting. It's not static for very long. But from that period between 1985 and 2000, that was a 200-month cycle. Then we had another one that occurred in January of 2016. That's when we were hitting the 104 level, when everybody was talking about par or even below par. And from there, we've rallied from 204 all the way up to 125. That was a 21-handle rally. And what did we do back in 2012? A 21-handle rally. So that area around that 125 and change, 126, was a major, major top. Now we have to find out what's going to happen with the euro from that level, but it looks like we could come all the way down to that 111 level without any trouble at all. And that was down 12 handles from where we are right now, and that would be nothing more than a 61% retracement of that. So when you're looking at a monthly chart, it's pretty hard to trade a monthly. What you do is you get to that monthly low down there, and then you go down to your dailies and then down to your 4-hour, and that gets to the point where you want to be looking. So, keep an eye on that. One of the questions we're having this morning at the Den is the fact that the grains are strong this morning. Bean oil is up, soybean meal is up quite a bit. So that's a sign that the South American situation in Argentina is getting worse. They did not get any rain We posted those weather maps, I believe, on Thursday or Friday from our good friend Rich Anderson and Cy Monley, showing you that the weather was supposed to bring in some precipitation. And as we know, the weatherman can only go about 3 days, and then he's rolling dice or spinning the wheel. So it didn't get the rain, and that's basically what happened. So when the rain doesn't come, the crops go up. So, well, that's what it looks like right now. But the beans are still moving higher, not substantially higher, but high enough that people are covering their short positions, and the people that are long are feeling just, a tad bit better. But we don't know what's going to happen with that, but nobody else does either. We were talking with Mr. Z about the fundamentals of some of these things like natural gas. Folks, there's no way you can cover all the fundamental stuff that's out there on these commodities. There's no... it's just unbelievable. There's just no way you can do it. It's just you can't do it at all. We're going to have a break here pretty soon. Remember, I'm going to be back on today because the O'Briens are up in New York for the trade show up there. Used to go there for many, many years, but haven't been back for a few years. It's just too much trouble to go all the way to the Big Apple anymore. But it used to be a whole lot of fun. Anyway, we'll get back to you in just a little bit. I want to share with you when we come back from the break, change the segment just a little bit here. I want to show you a trade that if it gets there, folks, this is when you want to call the orphanages and talk to Sister Mary Perpetual, telling her open up her little purse and buy. So we'll talk about that trade when we come back from the break.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to take just a second here to take a look at silver. As you know, we're still looking for silver and gold to come down around 1,300 in the gold, and possibly this silver has a chance to make around $15 an ounce. Folks, if we get there, this is going to be, I don't know if it's going to happen or when, or I don't know. I don't know the answer. The pattern says it could, but if we get there, that is going to be the one for the sister Mary Perpetual at the Widows and Orphans Fund, because gold at $15 an ounce would be at a 78% retracement, going back to the low on silver at $8 an ounce, folks. This would be a tremendous thing to look forward to. It's only $1.50 away, and as you can see, we dropped $1.50 real quickly during January and February, so that's still a possibility. So there might be a clearance sale coming in silver, and if we get it, I would really pay attention. Oh, we got a caller from New Jersey. Victor, are you there?
Yeah, I'm here.
What can I do for you?
What do you think about ABX? Is it going to go lower, bust through its low, or is that a bullish candle?
I don't know can you tell me what ABX is?
It's a gold company. Whatever, ABX.
Well, if it's okay. Oh, that's American Barrick, right?
Yeah. That's 12.
Sure.
Is it going to bust through?
No, I think it's going to bottom, but not until we got to get gold below $1,300 an ounce, and then we'll take a look at it. But I think it's got a.
Don't buy it yet. So it's going to go lower, you think?
I think it's going to go a little bit lower. Yes, I'd wait. I'd wait a little bit.
Candlestick there. Doesn't that look like a bullish candlestick, or no?
It could, but that's one candle. I can't work on one candle. I have to wait a little bit. So I would wait a little bit before I went in.
Why are they going lower? Because interest rates are going higher, so they got to pay more money.
I have no idea. Victor, I have no idea, but you know what? Nobody else does. I just look at the chart. Nobody else does either.
Look at GDX too, then, for me, because that one's getting beat up too. GDX.
It's the same thing. When you get a little bit lower, watch the gold price. If we get gold below 1,300, that's when you want to take a look at it. That's when it'll be oversold. Okay. Thanks for calling in, Victor. Okay, folks, we'll see you at 3 o'clock for the Tom O'Brien Show. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scan